Bitcoin as a world currency or some cryptocurrency, and they were talking about the dollar being just thrown into the fire, and other currencies. So now we're going to talk about, will the U.S. dollar fall into insignificance? Gold, silver versus BTC, LTC, Dash. Dash, you really have to pay attention to Dash. Dash is faster than BTC, LTC in the range of Ethereum. When it's done right, it's very cheap. It also has a privacy component if you choose to use it. So Dash is going gangbusters in Latin America. Venezuela is just Dash one end to the other. I would like to go there. I, however, don't want to be kidnapped, but I probably will go there at one point here. So which coins are taking over? LTC and Dash are definitely taking over in terms of payment processing, by far, especially on the dark net, but by far LTC. Bitcoin Cash is taking a bit of a chunk, and of course Ethereum also, but LTC and Dash. Will BTC continue rising, and when? We'll talk about that a little bit, which products to hold on now. So we went over a little bit of that. All right, so let's talk about what the real plan is, as I see it. And the reason it's critical, I can't emphasize this enough. Cannot emphasize this enough. The single biggest economic event anybody can really go through is the crash of a currency. A crash of a stock market can be really bad. Crash of a bond market generally is tied in with the crash of a currency. But a stock market can be very, very bad. But when you have a crash of a currency, you're in a Mad Max scenario. I mean, I don't know if anybody's... When Argentina's peso crashed, this goes back quite a while now. When Argentina's peso crashed, I flew over to Argentina. Now, I had been to Argentina before, and I knew how beautiful it was and how vibrant it was. I also knew that it was insane, and I'm going to talk about that a little bit because it applies to the United States to a certain extent. It was insane because it wasn't economically productive, especially in the cities. Now, the outlying ranches and the outlying wine country and things like that, they were productive, meaning they were producing real goods and real services for export and that kind of thing. But Argentina's currency was too high, and it was engaging, it was increasing its debts, and very bad situation. And it really wasn't a very productive country after it got used to the high currency. People were essentially doing economic activities that I call, doing each other's laundry, essentially. What's the number one profession in Argentina? Is a psychoanalyst or a counselor, meaning, you're basically paying somebody to listen to you talk, and they're talking back, and that's their, quote, economic activity. There is zero value created. The medical field is basically a zero value created environment. Now, certainly drugs may have some value, medical equipment can have some value, but the actual service component is practically a zero value. Now, of course, if you got a heart attack and somebody saves you, yeah, that's got value to you. But as far as a transferable value, zero. If on the other hand, I, who happen to love to weld and love to machine and love to make things, I'm an engineer, as I've talked about, I go ahead and I grab my cat's cans, and I go ahead and I melt the aluminum cans down, and then I go ahead and I make let's say a goblet, a beautiful goblet of some kind. That goblet has value. It's got added value. I can go ahead and sell it. I can export it to gain currency, and it will have lasting value and can be moved from person to person. That's sort of the overview of what was going on with Argentina. Powers that be, thank you for asking it. I apologize for, I use that term all the time. And you know what? I'm going to go ahead and clarify. Thank you that. I rail against acronyms, and here I am using them myself. Darn it. Why can't I just be perfect, right? Powers that be. Okay, there you go. PTB. Thanks, Ed. So anyway, the bottom line on it is I went to Argentina when the currency had crashed, and I saw people who were really well dressed. Basically, obviously they were like a former businessman or former housewife in a nice area. They're dumpster diving. They're begging for food. All just just absolute horror. I was walking over people on the street begging for money. I mean, it was a terrible, terrible, terrible situation. But I'm glad I went because I know what it looks like. And I was there for probably there for a week and a half. And also, you know, I gave money and I spent money and I did what I could. But that's the situation with the currency crash. So, FYI, this is kind of a heavy-duty discussion. But the flip side of it is when you are prepared and you have foresight, it can be an economic level up, you know, a stair-step function level up in your wealth. Some of the greatest fortunes are made in these economic dislocating periods. Okay, so let's go through this real quick. If hopefully I've caught your attention with this. So is the U.S. dollar falling in significance? My opinion is yes. Now there's long-term U.S. dollar charts that show. Well, you know what? Let's take a look at that. Let's look at okay, 100-year U.S. dollar chart. Let's see where it is, because you're going to see, well, 43 years is not really, let's do it, but it's not really I mean, the bulk of the dollar drop occurred after Nixon unpegged the dollar in 1971, but still it was dropping quite a bit. All right, so yeah, it doesn't really it's not as far, anywhere near as far back as I want. Nonetheless, you have a defined downtrend. And notice, you know, general law and chart patterns, lower, generally a lower low and a lower high, lower low, lower high, lower low. Now this one bounced up, but if we compare it here, we're at a lower high. So where does that tell us we're going to go? Well, I mean, there are some funky mathematics which basically take you, do some deriving from, you know, whichever wave drop you had as a percentage of the total high to the total low. I have pegged this drop as taking us below 80 down to around 70. That's where, and that's, you know, at a minimum. Now, one of the things that happens with a currency, which is really an interesting phenomenon that doesn't always happen in stocks, because stocks you can generally assign a fundamental value. In a fiat currency, as the situation we're in now, the only value it really has, for the most part, is faith, and faith is super easy to lose. So once you drop, below a certain critical level, could be 70, could be 55 or whatever, 65. The next move is rapid, like it drops like a rock. It's the way to describe how a currency collapses is slow at first and then all of the sudden, like bam, it just happens. So you have to watch out for that. But my expectation is that we're going to see, sorry about that. My expectation is we're going to see a significant downward trend. And we're already seeing it. And that's why I said, hey, that's a false move. The dollar's getting a false bid. It's not going to maintain it. This could all change if the Fed, that's the dollar index. That's the DXY. That's the DXY, which is it's a basket of currencies, basically, that you judge it. Oh, and you know what, Ed? You bring up an interesting question, an interesting point. This isn't against gold, okay? This is against other junk paper. That's what this is. Other junk paper. The euro, the yuan, the yen, the New Zealand, I think. Well, that's what I'm talking about. But the other major reserves currency are all junk. That's what the DXY is. That's what I said. So this is the DXY is basically a basket of currencies allocated a certain percentage. It's euro heavy. In fact, it's not even really trading partner heavy. It's euro heavy. But nonetheless, it's junk versus junk. So we're becoming worse junk than the other junk. They're all junk. So if that makes any sense. And that's just indicative of the situation we're dealing with. So we've lost at this point 98% of the value since the 1913. Now the Fed and the IRS were created the same year. They were created because once you have the currency and you have the taxing authority, you basically control the populace, 100%. So that was the year capitalism left the building. So And of course, what they did initially was they ramped up the money supply. That's why the roaring 20s, ramped up the money supply, and then they crashed it, withdrew the money supply, crashed the stock market. Then the Federal Reserve and its member banks went in, and the families bought everything at pennies on the dollar, took dramatic control of the U.S. economy, and then repeated it over and over and over. And now we're in another phase where they're repeating the same thing over and over and over. They ramped up the currency supply. Now they're withdrawing the currency supply. And I mean, what can happen when you ramp up interest rates? Now, if they ramp up interest rates, that could give the dollar a bit of a life support. But that doesn't look like the game plan they're going with at this point. It looks like what they're doing is they're going to transition to another false game, another joke. And it doesn't look like it's very far away. Okay? Central banks, Fed, yes. I don't know anything about the Vatican. I don't pay any attention to them. But if you're aware of it, I steer clear of Vatican anything and everything I can every time I can. But I think it's going to fall to around 70 or lower. So a point from 70 down is 20 points for the USD, which is, round numbers, 22%-ish. Well, a 22% bounce, if you just went linearly, you would say that there would be a 22% bounce in the crypto market, which, hey, nobody would argue, nobody would hate. That would only take you up to, call it 500 billion-ish, but that's not the way it works. It doesn't move linearly. It's like exponentially almost for Bitcoin or cryptos if the dollar were to drop that significantly. Because you're talking about a whopper, a $16, $20 trillion economy based around the dollar, with budget deficits of equivalent magnitude or higher, and off-book banking lending and off-book quadrillions in derivatives, a portion of that attempting to squeeze